Awesome. A no answer is a yes. Perfect. So fake outs are basically a failed break and retest, right? Let's draw a, so let's say we have a resistance right over here. And let's say we have a support down over here, right? And we have candles that are moving bullish. Why are they doing like this here? These boxes. So we have candles moving bullish, it's moving bullish in terms of, okay, yeah, perfect. So we're reaching resistance. And what's going to happen is that now we might break resistance, right? But what happens is sometimes that, you get candles that move against you, and then there are some candles. So now when this bearish candle has formed, most times what's going to happen is that this might not mean a reversal, or like, you're still waiting for price to reach resistance, and you have a candle that goes up like this, and then you have another candle that kind of, like breaks out like this. Now you have a breakout, right? So the most traditional way to look at it would be like, okay, so now basically I'm going to wait for a candle to form bearish. You have a bearish candle forming, and then the next candle is going to be formed, which is going to say, okay, perfect. So now we have a bullish candle forming right at this resistance turned support. So when this happens, someone can turn around and say, okay, perfect. So this basically means is now that this candle broke out, this did like a retest, and now we're making a support for the next candle to potentially continue moving bullish, kind of like this, right? It moves bullish. You're like, perfect, we're in the trade, and now we should go up. So now this is the basic structure of a break, a retest, and then continuation, right? But sometimes what happens is that instead of going up, you're going to be faced with a candle that's going to go all the way back down like this. You have a big ass candle that goes back down like this, right? So some people that get confused, they're like, oh man, it came down, now I don't know what to do, and this and that. But when I started to look at this from an objective perspective, what this meant was that, okay, we had basically a resistance right over here. Candles broke out and formed support down here. So now when this candle is coming back under resistance, no, under support now, so this means now the next candle should respect this area as resistance, right? So when you start looking at the charts, what you're going to start noticing is that the next candle might form, it might do like a retest and then continue down, right? So that move up, so this move up basically becomes a fake out. Now this is a bullish fake out, right? It's just like a break, a retest, and you wait for a candle to close bullish, and the next one is anticipated to go up, right? That's awesome. But then once the next candle comes back down in the range, there's 100%, well, I think there's still a very, very high probability that the next candle will retest this area and then continue moving down, and what I've seen is, so if this area is going to be an area for consolidation here, let's say, so this is a range, let's say this range is around, I would say like 25 pips. From what I've seen, there's a very, very, very high probability that the next candles will continue moving down to the, to the support here. So this is a bullish fake out. When a bullish fake out happens, price is going to go back down to this support, because if you look at it in a way that if price was ranging, it tried to break up, it couldn't maintain its move bullish right here. This is a bullish move. It couldn't maintain its move bullish. So if it couldn't go bullish, where else will it go? Right? There's going to be a high chance it's going to go the opposite way. So when it comes down to the support, this will be the trade. This will be the entry candle. And this is all based on the fact that as long as this candle stays below the high of the previous one, it should continue moving down. Or at least I would say stays below the 50% of the previous candle right over here. It should continue moving down. Once it comes down, obviously there's going to be a candle that's going to bounce up. Oh, wrong color. Let me go back to black color. So obviously there's going to be a candle that's going to bounce up like this, but then there's going to be a 70% chance that the next candle is going to break this support and continue moving down. Because if this was ranging, right, if this whole area was ranging, right, after the range, candles break out of the range, you know? So this broke out, it couldn't maintain its move up. So then what's going to happen? It's going to go back down to support. It's going to probably continue falling down. Make sense till now? I think it's pretty, like, if you look at it from a market structure perspective, it's just that simple. All you got to do is wait for a candle to come back in the range. Once it comes back in the range, you have to wait for the next candle to retest the resistance. And that's going to be your trade that, okay, so now I'm anticipating the next candle to continue moving down. What happened during Finland? Oh, okay. Right? So this is a form of a bullish fake out. So what we're going to do now is that we're going to talk about a bearish fake out. Right? Let's remove all of this. I wonder what time is it on the other part of the world. It's 7 a.m. over here. Hey, Drew. We got Drew here. Ooh. Oh, 1 in the afternoon. That is amazing time. All right. So we have candles that are running bearish. I really like drawing these candles here. We have candles running bearish, and then we have some sort of a bullish candle, maybe looks like this, you know, and then we have a bearish candle that continues moving down. And everyone's like, oh yeah, we're going down, you know, we're going down and it's going to bounce some support. But what happens is the price goes further down. You're like, oh, we broke support. Let's sell it. They sell support. And then you have a candle that goes bullish. And you're like, oh man, now we're in a drawdown. And then the next candle finishes kind of like, you know, kind of like this. When it finishes like this, someone turns around and say, okay, perfect. So now what we got to do is we have to put a stop above this bearish candle and anticipate the next candle to continue moving down. You know, but what happens is that the next candle creates a wick, you know, and then what happens is that it forms bullish and closes back in the range. You know, this is what happens. And some people turn and say, okay, you know what, we're going to hold it because it broke support and it has to go down. But if you look at objectively, what really happened was that this candle broke support. This candle closed below this support turned resistance now. This candle closed below resistance, but this candle closed back inside the range. You know, it closed back inside the range. So if this is a 30-minute time frame or a 1 hour time frame, and if you see these two candles respecting this area as resistance, and now what's going to happen is now since this candle closed back in the range, the next candle is most probably, highly probably, it's going to respect this area as support. Right? And what's going to happen is from what I've seen, there's an 80 to 90% chance that if this price was ranging here, you know, the next candles will eventually, they will head right back up to resistance. You know, and the same principle applies that if price couldn't maintain its move to the bearish side right over here, then what else will it do? Once it closes back in the range, it's going to go to the opposite side, 100%. I've seen this happen all the time. It goes back to the other side, and then there's still a 60 to 70% chance that it's going to break its way upwards. So this is an example of a bearish fake out. You know, it's like a break and retest. It's like a breaking out of the zone, but this is when the zone breaks are not basically successful. You know, when the break and retest is not successful, you know, like, okay, you know, we have confirmations to go further down, but in reality, the next candle closes back in the range. You know, this is a little advanced concept, but once you really start understanding how candles move through zones, this becomes really easy. Because essentially, the only thing you're looking at is that, okay, the candles are moving and now the candle is closing back in the zone. Okay, perfect. So if the candles couldn't maintain their move bearish with this breakout and they close back in the range, then this means now the candles are going to go, they're going to start to move up. But didn't you enter on the bearish close below support? Yes. So if you enter to sell over here, right, obviously your stop loss is going to be above this candle right over here, which got stopped out, right? It got stopped out. You're like, okay, perfect. Maybe, my break and retest didn't work. So then this candle stopped you out and closed back in the range, and then this was the entry candle right here. So from what I've learned and seen from my experience is that the stop, I'm going to place maybe 50% of this candle or even below this candle if the stop loss is is okay, is not too big. But at the same time, once you guys start seeing these examples in live charts, then you start creating your own biases for stops and things like that. But it's really important to actually see this happen a couple of times because you need to get used to these movements. The first time it's going to happen, you're going to be like, okay, you know what? I see it happens. I might want to enter. I might not want to enter. But once you see it like 4, 5, 6 times, then you're going to start to create a bias that, okay, you know what? This really happens. It works, and based on probability, it should work in my direction. The hardest part is changing what you want to see actually happening. Yeah, that's the hardest part. That's actually the hardest part. That once you got stopped, and then you quickly got to change your bias, like a ninja. Just change it and see that, okay, you know what? This is what's happening now. So, so we're going to go over some examples here, and then I'm going to show you the PDF I wrote. That PDF I wrote, I think, like a year and a half ago. So when break and retest fails, there is a really good opportunity to take a trade to ride the movement the other way. Yes, but you need to wait for it to happen. It's not always that if the break and retest fails, like let's say, because the next candle can actually, come falling down because there are infinite number of ways things can happen. This can happen too. Right? It's all a probability. It's not going to happen all the time. It's just a probability that it's a high probability that this is going to happen. So we always got to move with the probability because it's never 100% sure that if the break and retest fails, it's always going to move the other way. No, it's not going to happen like that. There's always a set amount of probability. And the worst thing is that I see people do is like once they see something and they want to enter and execute, and if it doesn't work, it just frustrates them. And what if you're getting frustrated, that means you're not spending enough time in the market. You're not looking at enough examples on the charts, or you're not actually waiting, or your size is too big, or you've lost a lot and you wanted this to work and it didn't work. So if you're getting frustrated, you need to just like calm down, relax, and look at things objectively. So we're gonna go over. Oh, let me see if this is recording or not. Oh, it's recording. Perfect. Imagine if this wasn't recording. So let's go over a couple of slides here. Like a lot of people have actually seen those examples in slides, and some people have not seen those slides. So it's going to be a good opportunity for, it's like a small refresher here. Let's see, how can I make this work? Okay, we got fake outs here. So what's happening here is real quick. We have a support down here, and we have this candle bearish. Now this candle has no wick to the bottom. When candles have no wicks to the bottom, that generally means there's no range for the next candle to continue down. Because if there's a wick like this, this means the next candle has the opportunity to fill that wick, just like over here, it's still wicked up a little bit. Over here, it's still fill this wick. So when there's no wicks like this here, no wick here, no wick at the top, no wick at the top, this means there's not enough range for the next candle to go. Because basically, what I look at wicks is that when candles leave wicks, that's like leaving breadcrumbs for the next candles to continue on. But when candles have no wicks, there's a 50-50 chance, 50-50% chance that the next candle either it's going to reject it or it's going to continue moving down, as far as I've seen. So at this point, there's obviously no trade because candle has no wick at the bottom. It's also has support. So I mean, it's pretty hard to say where the next candle is going to go, right? So if you wait, the next candle falls down. I mean, who knew, right? At this point, now some people might take sells here, but I wouldn't, because I've seen candles with no wicks just move sometimes they move the opposite way. Sometimes they continue moving down. We're going to look at gold too at the end. Because this happened on Friday. So at this point, when candle move bearish, obviously there's no sells, because candles are bearish, there's no sells. For sells, you need to wait for a resistance to be formed and then a continuation move down. Because essentially what price did right now, it created a low. When lows and highs are created, price will always retrace. It will create a resistance or a support respectively, and then it will retest that low or the high. There's a very, very high chance it will always retest the low and the high. So we're going to wait for price to create a resistance so that it can come down to retest this low. So the next candle goes up and closes back in the range, right? It closes back in the range. So basically, either you can do two things, right? Now, the number one thing is that you can enter here having a stop down over here, depending on, this is GJ, so maybe the stop is going to be like 15 to 20 pips, or even you can have a stop, at the middle of this candle, right? But the next candle is going to give you more, I'd say like a confirmation. So next candle closes bearish, but it still closes above support, right? It still closes above support. So even if you had a buy right here, it's still a valid buy, because your stops are still in. But there are obviously more conservative traders that wait for a bullish candle to form above support right over here, so that they can have a stop below that candle, having a much more stronger confirmation. That's not a bad thing at all, but once you start seeing things over and over again, you will start to get more confident with early entries. That just happens naturally. So now we wait for the next candle. Next candle prints bearish as well, and still for conservative traders, still no trade. Wait for the next candle. Next candle closes bullish. So this will be an opportunity for you to, for someone who's conservative, you can take an entry here. What I've seen some people do is you put stops right below the candle. I would say that's not a good idea. I mean, it could work, but usually I would have my stops maybe around 3-4 pips below the previous candle. Because you got to give price room to breathe. I mean, sometimes it's going to come down to the low, and the spread is going to knock you out. And then you turn around and say, oh man, the fucking spread, it knocked me out. I should have just kept it a little lower. I should have been okay. So these are things that you learn along the way. Now let's wait for the next candle here. Let's see what happens. Bullish candle here, right? So the candle closed bullish. The next one, if it had to go bullish, it needed to respect the low of the previous candle. That's the only way it had to go bullish. So now we're back in the range. So now we're looking at, okay, so once we had this support right here, where's the resistance? So resistance is going to be right over here. That's a resistance. So now there's a high chance price should continue moving bullish and go up to the resistance, and then there's a less chance that price will continue moving up because it couldn't maintain its move bearish. So it should maintain its move bullish. Let's wait for next candle. This is where I normally at this point, I secure my profits. I bring my stop loss below the previous candle, because if I want candles to continue moving, especially on the 30-minute time frame, I would want the next candle to respect the low of the previous candle. And this candle, it stops us out, moves up, and look, it closes with no wick at the top. It closes with no wick at the top. So even though if you were in this trade without moving your stop loss, you'd still be in the trade, but the next candle closes with no wick on the top. So this tells me that, maybe the next candle could maybe move up or down. We're not really sure, because there's no range on this candle. When candles have no ranges, that means there's not enough room for the next candle to continue moving up. And the next candle is doji candle. So the way I've been looking at dojis is that normally nothing happens, because look, this candle opened price at, let's say, we would say, what is this? 136,670, for example, 136,670, and it closed at 136,670. So for the full 30 minutes, price basically did nothing. It opened at 136,670 and it closed at 136,670. Did it try to fill the wicks to the left? Yes. Yes. So once price is moving up, you're obviously looking left. You're always looking left to see, okay, what's going on to the left. So if you look left from here, you will see that there's a lot of consolidation happening, which makes sense because this is also resistance area too. But once this is a doji candle, I like to look at doji candles like this. Oh, wrong one. I like to look at doji candles something like this, as if nothing happened, because price opened and closed at the same level. So I mean, at that time, nothing happened. It was just a waste of time, right? So wait for the next candle. Next candle goes bearish, and then eventually, we start to go up, right? So there's a high chance price will go to the next resistance, and then there's a less chance price will break up. There's a 70% chance price will continue breaking up and go up up to the next zone. So the fake outs are basically to see if we have a breakdown like this. We have a breakdown. A failed breakout is called basically a fake out. And I get a lot of questions saying that, oh, how can you spot a fake out? You can't spot a fake out. Like, a fake out is there to fake you out. It's like when you're playing soccer and someone's dodging you, you're like, hey, how can I spot he's going to dodge me? You're like, yeah, you can't, because a dodge is supposed to dodge you, So fake out is supposed to fake you out. You won't know it's a fake out until it happens and until you see it, basically. So let's move on to the next example here. All right. So the first thing we do all the time is we draw our most recent support right over here, and we draw our most recent resistance right over here, right? Once that's done, now we wait. So now this candle is at support. It doesn't mean it's a sell. It doesn't mean it's a buy. It's not a buy because the candle is bearish. It hasn't flipped in our direction. It doesn't mean it's sell because it's at support. It has to break support to be a sell. So let's see what happens here. Oh, well, I guess it was a sell. So candle broke down. It created a low. So the same thing happened here. It made a low, have to wait for candle to create some sort of a resistance, and then continue moving down to retest this low. That's going to be the ideal trade, also based on the fact that we look left, there's enough wick here, so if it maintains its resistance, it's going to continue moving down. So we're going to wait. Let's wait and see what happens. Oh, the next candle closes back in the range, right? It closes back in the range. So now we're like, okay, so maybe this breakdown was a fake out. So whenever a candle closes back in the range, this is what starts to run in my head. Okay, now maybe that breakdown was a fake out. Okay, perfect. If that was a fake out, then the next candles, they should respect this support. If the support is respected, there's a very high chance price will continue up to resistance, and there's even less high of a chance that price will continue breaking up. So we're going to see what happens. The next candle closes bearish. The candle after that closes bullish. So now for conservative traders, this is going to be the perfect opportunity to enter a buy, have a stop loss below the previous candle, and then expect for price to continue up to this range and then eventually break out of here. So this is GBP AUD. So now GBP AUD has a lot of volume. So can we say that most recent support is more than one candle? Most recent support is more than one candle. I don't know what that means. I mean, I've never looked at support that way. I've only looked at support in a way that if a 30-minute or a higher time frame candles reverse from an area, I would call that a support or resistance. Just like right over here, candle was bullish, candle closed bearish, and then I would say, okay, you know what? A resistance is forming right over here. And the next candle closed bearish, so resistance formed. Same thing right over here. We had a support form because candle came bearish. The next candle was bullish, so I'm like, okay, support has been formed on the 30-minute time frame. To me, that's support. This candle came down to support. The solo green candle wasn't considered. I don't know which solo candle you're talking about. Like, without annotating, I have no idea. So we're going to get to that at the end. So this candle went up, so it's not like, where's Jamarvins? Hey, Jamarvins.
Yeah, I'm talking about.
Oh, Jamarvins went back on mute again. Hello. Hello.
Hello.
Yeah.
Yeah, the green candle. Not the fake out one that came back in the zone. The last candle.
With this one?
Yeah, that one. Like, that's not support.
No, because it didn't come all the way down over here.
Oh, okay.
Yeah, it didn't come all the way down over here. It went up to this area, and the next candle went bearish, so it respected that as resistance.
Yeah, I didn't think you would consider just one candle as support.
Oh, okay. Yeah. Yeah, because you're looking at the most recent support, right? So if this was the most recent support, price has to come down over here.
Right.
Yeah, and that's about it.
No, thank you.
Yeah, no problem. No, first time I heard him talk. Perfect. Now he can be regular, right? So now let's wait for next candle. Next candle closes again like a doji. So this is what I'm going to consider same thing, like nothing happens. Candles open and close at the same level. And I mean, it's just like a time wasting candle. Wait for next candle. So now this is what I'm talking about here. So if we do this right here and we consider the next candle, this candle based on the previous one, this would make sense because the doji was just like a time wasting candle because price opened or closed at the same level. It means nothing basically happened, so I now call it a nothing candle. So now this candle is based on the previous one, still in the trade. Let's wait for next one, and then eventually starts to break out. Right? If you go next, it just continues to go up. So this was a bearish fake out. Like price tried to break down, couldn't break down, came back in the range. So when price comes back in the range, start to see if candles respect support. When support is being respected, there's a very, very, very high chance it will continue going to the next resistance or to the next zone. People who are coming in late, you can watch the recording because I'm not going to go back explaining what we already explained. So this was the entry candle right here, or even after this one was the entry candle. So let's go to the next one. Yeah, because the thing is that if I can wake up at 7 a.m. on Saturday, I'm pretty sure, if someone has time, they can also do the same. All right. So we have this situation here now. So, same thing we do here. We draw support. We draw our most recent support and resistance. So we got support right over here. It's a pretty big zone over here. These candles, and then we have another big, kind of like resistance right over here. So we're gonna see what happens. So now, if we're looking at this bullish candle right over here, it seems like it's kind of like rejecting this support. We don't know whether the next candle is going to go up or it's going to go down because, the body of this bullish candle is pretty small. So we don't really know if it's going to continue up or down. So we're just going to wait for the next candle to form. Next candle forms bullish. So now when the next candle forms bullish, what I'm basically looking at is that, okay, if this is forming bullish, maybe it's breaking out of this resistance, right? So would this be a nice buy or would someone want to wait? Okay. Perfect. So then go to the next candle and see what happens. Next candle goes bullish. Perfect. Create a high and wait to respect the support. Yep. The next candle, now we have a breakout. Now we have a breakout. So now all we got to do is we got to wait for the next candle to close, maybe somewhere down over here and create a support to continue moving up. Let's wait for next candle. Very simple. Whenever candles form like this, it's very simple. Just wait for the next candle. Wait for the next candle. Next candle forms bearish at support. So now you got to wait for the next candle to form bullish so you can take a buy for price to continue going up. Oh, next candle closes back in the range. Now this move up was a fake out. Now this candle has moved way back down in the range, way back down in the range. So taking a sell right after this candle close would be pretty bad, because now you're taking a sell almost down at this support here, right? So the basic idea would be, now what I've tried doing is I would want the next candle to continue going up, but not to break the high of the previous candle. The candle that broke back in the range, the next candle, it should not break the high of the previous candle. Because if it breaks the high of the previous candle, that means there's a high chance the next candle can continue going up. Make sense? So if you want price to go down, we want price to respect the highs of the previous candles. We want price to make lower lows and lower highs. That's basically it. So a trade I entered on Friday, it was on that the candle came up close to the high of the candle, and then I took a sell and price continued move down, right? So let's see what happens on the next candle here. Ooh, it almost came up to break that high. So for someone who's aggressive, this would have been an aggressive entry right here, anticipating that the candle does not break the high of the previous candle. So if you look, this is a 30-minute time frame. Only look at these things on 30-minute and above time frames, not on the 15-minute, because 15-minute time frames, they're going to give you a lot of candles that are going to go up and down, and you're going to be confused. So 30-minute and above is the best time frame to look for confirmations. So, someone who's super conservative, they might not be looking for a trade here. They might say, okay, yeah, I'm just going to wait a little bit. So now we have this information right over here. Bearish candle right over here. So now if we go back to the idea that, okay, if the fake out is that, okay, we have a breakout upwards, price couldn't maintain its move bullish, came back in the range, now it's coming back down to support with the bearish momentum. So there's a 70% chance that if price couldn't maintain its move up, it's going to maintain its move down, because trading is all about chances. It's all about probabilities. And if price is going to move down, it has to respect the high of the previous candle right there. Now you're all playing on chances. So let's see what happens in the next candle. Next candle starts to break down. So this was your entry. After this candle, this was your entry candle. So this whole candle that went down, this was the trade right here. Whenever you're looking at charts, or whenever you're looking at trades you've missed, always look at the big candles and always ask yourself, how could you have taken that trade, or how could you have rode that candle down? That's all basically it. Because whenever I look at the charts, I always look at big candles and I always ask myself, how could I have entered to ride all that candle down? That's it. And then I start to look at clues that, okay, what makes much more sense? And then I look back in the charts that, okay, has this happened before? And then in the live charts, I start to look for the same thing, that, is it happening? Does this make sense? Because I know I studied fake outs for about 6 months before I really got to the point, okay, you know what? This actually makes sense. It actually happens. Right? Let's take a look at the next candle here. Oh yeah, it moves further down. Would you be concerned about selling at that support level, or does the fake out give you more confidence? Yeah, so the fake out gives more confidence, because it's all about probability, right? It's all about what I've seen, what I've learned, what's the probability of one thing happening, and that breeds in confidence that, okay, I'm confident because I've seen it happen a lot of times. There's a higher probability of it happening, so I'm going to execute the trade. That's basically it. Because now, in the other way, what can happen is that the next candle can, the next candle can go up and stop you out. That can also happen too. And when that happens, that's just a smaller probability of the fake out not working out. That's basically it. You never take a loss personally. Never take a loss personally. Whenever you take a trade, make sure it's a planned, well thought out trade. If it's a well thought out trade, and if it doesn't work, there's probably going to be a probability that it didn't work. But most times it will always work. Let's see what happens on the next ones here. Oh, kind of came up, and then further down. So these left big wicks and whatnot, and price did what it had to do. But we're just looking at the this fake out that happened. It went to the upside, candle came back down in the range. Next candle did kind of like a retest. This one also tried to do a retest. Confirmation candle. This was the trade candle right here. But when candles break back down in the range, they fail to break back above golden fake out trade. Yes, exactly. Right. So now we're going to go over the example we saw on the session there. Let's see if I can bring it up here without breaking things. Oh, already broke something. All right. Okay. So this was gold here, right? This was gold here. Get rid of this. This was gold. Gold was somewhere over here, right? So what we're going to do is we're going to do something like, Jose Nunez, I'm late. Will this be recorded? Yes. Yes, sir. If we do this, and then we do this, and then we kind of do this. Perfect. Right? So what was happening here was we had support right over here. Then we had resistance right over here. Right? So on Friday, when that guy was here who was talking about Wyckoff theory and whatnot, whatever stuff he was talking about, he was like, okay, look, gold is breaking up and now it's going to continue moving up. But I saw, okay, perfect. Gold is breaking up, it's going to continue moving. If it's going to continue moving up, all I'm going to wait for is to see that if we can have a bearish candle form over here, and then followed by a, let's say, a bullish candle, then I'm going to take a buy for price to continue moving up to wherever he wanted price to go, right? Because now if you look left, there's clean candles here, so that buy is what makes sense, So I said, okay, you know what? We're just going to wait. We're just going to wait to see what happens. And then we had the candle that kind of broke back down. So once this candle broke back down, I turned around and said, okay, well, this seems like that move up was a fake out. If that move up was a fake out, this means that price was respecting the support, which was created on the 12th December around London. So if the London session is respecting price as support, so if you look right, so once we look left, and then we look right, we see what price is this. This is almost like 1473, 1472.60. So when you cross the road, you always look left and right. When you're looking at the charts, you're always looking left, and then you're looking right. You're looking right to see what price is this, right? So you always talk, I like to talk to myself all the time when I'm taking the trade. So I'm saying to myself, okay, if this was support, this support was held in London session. So if a London session respected price as support, it has to be a big deal. Because fuck, man, London session has a lot of volatility. It has a lot of volume. So if it's respecting price, this means it's a big deal. So now, if this level is being respected again and candles coming back down, this means that this move up was a fake out. So if I'm looking at potential sells, if I'm looking around and see that, okay, if price is going to continue down, how far will it go down to? So I'm looking left and see, okay, well, obviously it's going to break this support because it couldn't break up, and gold has a lot of volume at this point. So there's a high probability gold can fill this wick down over here. And if it still has enough momentum, it's going to come down and fill this range right over here at around 1466, right? So I started getting ready to take a trade. So now my trade idea was that, okay, if price comes up, If price comes up, it should not break the high of the previous bearish candle and should continue moving down, right? The only problem was that there was retail sales at that time. Because if you look at the time, this is what, 8 a.m. Eastern, and the 8:30 a.m. Eastern would have been the trading candle. So if you look at the news, the retail sales were expected to be good, right? And that would have pushed gold down further more. But eventually what happened was that that when price came up, I entered sells. Let me just remove all this garbage here, right? So price came up here, I entered sells, kept my stop above the previous candle and anticipated for price to continue moving down, right? That's what happened. It came down to the wick fill. I took profits, candle closed with no wick. Candle closed with no wick. This means what? There's no range for the next candle to go down. The next candle can go down because there's a lot of bearish momentum, but there's no range. I was expecting this candle to kind of like retrace and leave a wick so that we can continue moving down to 1466. I had euro sales seen and news didn't weaken news. Yeah, exactly. Like the news was bad. It didn't weaken the USD because gold still kept falling. And we look at the next candles. Next candle kind of like wicked down and then continued back up and closed back in the range. So it did another fake out right over here. And then this candle respected resistance here. The next candle, this one was a big fuck you candle because it went down all the way down and it went back up. And then gold did what it had to do. Gold just started ranging here. And why did gold start ranging? Because there was no volume. We moved into the Friday afternoon and it just started ranging and we're like, whatever. Yeah, end of the week. Right. So we're gonna go over the PDF now. I'm not sure when this PDF was written. I think this was written like a long time ago. Let me see here. This was done in, I think it was done a long time ago. Oh, the 30th December 2018, a year ago. Yeah, this was done a year ago. Okay, let me just try to download this PDF. Download the PDF. Bring it over here. I hope you guys can see the PDF. Yeah? No? Yes? No? Yes? Okay, perfect. Yes. All right. Awesome. Well, there's a story about, Cypher told them beware of fake outs. I was told to beware of fake outs, stop punch, the regular trader way. But during the last 4 months, we have been able to read the candles and tell the story by finally learning to read the candles. Stories, we figured out how to battle fake outs. This work has been in work for years and years. That's just a joke, But I spent a lot of time looking at fake outs, seeing if they work or not, for 4 or 5 months, and then I wrote the PDF. I'm like, okay, this makes sense, so let's bring it out. So same thing here. Price is a bullish fake out. So this is a bullish fake breakout. Price formed resistance at A. Let me just bring my marker over here. Price formed resistance at A and then broke out and retested. This is a breakout, retested at B. Found resistance at A, at C, made a high, and then we had a big fuck you candle that closed back down at D, and then it retested the breakout point at E. The same resistance that was retested here and the same support that was retested here. And now there's a high chance the price will now continue moving down and create a support at F, and if there's still momentum, it's going to continue moving down. The same thing goes for a bearish fake out. Right down over here. Price found support at A, kind of like retested, broke support at B, and then made a low and made another support at C for continuation down. Price continued moving down, created a low, it came up, it had to retest this area to continue moving down, but instead it broke back above, created a high, and then retested the same support that was retested at A, It was retested at B, but it broke it, and it was retested as resistance at C. So now this move down became a fake out, and then price started to continue moving up. Right? I'm going to give a little example here soon. Okay, so let me just give an example here right now. So, sometimes when I was new, right? So I'm not sure if this has happened to everybody, but it happened to me. When I was new, what would happen was that, price would be in a range, right? Price would be in a range. And candles would come down to support, and I'd be like, okay, you know what? Buy support. Candles came down to support, and I want to buy support. So I place a buy. I place a buy right here. What happens after that was that price breaks support and goes down, and now I'm in a drawdown. So at this point, when I'm in a drawdown, my drawdown is, let's say, at this point it comes to negative $50 drawdown. I'm like, oh shit, man, negative $50 drawdown. Okay, hope it comes back to my range and continues to go my way. So I'm waiting now. I've removed my stop loss. I'm waiting, and then what happens is that price continues down and takes me into a deeper drawdown of negative $100. And now I'm really sweating. Now I'm like, holy shit, now what I'm going to do? So I'm going to say, okay, you know what? I'm going to go about my day, and I'm going to come back, and I'm going to see if things change. So that's what I'm going to do. I'm like, okay, perfect, let's do that. So I go about my day, I come back, and then, price has came back, and now my drawdown is, let's say, it came down to negative $30. I'm like, okay, perfect. Now it's coming back down, and I'm going to close when price comes to break even. That's the time when I'm just going to close my position. So I'm just going to keep on doing what I'm doing in my life, and then I'm going to come back, and everything's going to be fine. But what happens after that is, when I look at the chart again, I would see that my drawdown has gone up to negative $200. And I'm like, what the fuck is going on here? This happened to me a lot of times, and I'm pretty sure this happened to a lot of guys here too, and I'm like, man, why? So when I start to look at this and saying why, I realized that, okay, what basically happened was that this was support. Let me get a better color here. This was support. Price broke support. Maybe this was the retest for price to continue moving down. When I start to look at my losses and I start to look at the charts, I realize, man, so this is what a break and retest is. I was just in the wrong side of the trade. So whenever I was taking losses, I was looking at this and I'm like, okay, I took a loss. How could I have taken the win? So this made sense to me, that price has broken support and now it's retesting support as resistance. And this was my downfall right over here, that I was praying. So once price was retracing, I was praying that, okay, now it's going to come back, but that was a retest for price to continue moving down. But sometimes what would happen was that sometimes, instead of having this retest to continue down, price would actually go back in profits. And I wouldn't know why it went in profits. All I would know is, hey, look, guys, I was right. My trade was awesome. Even though I went in a deep drawdown and I was sweating, but then eventually I went in profits. And I was like, oh yeah, that was awesome. This doesn't happen all the time. This was a fake out trade without me realizing this, because I was naive. I didn't know these things, so this happens with a lot of things. So whenever you took losses, always look to see that how could you have taken the right trade, or it's like what they say, be a man, do the right thing. Russell Peters. Be a man. When you take a loss, be a man. Look and do the right thing. All right. Let's go to the next page here. Okay, tips. Wait for candles to close ideally on the 15-minute and 30-minute time frame. See, even a year ago, the same thing, 15-minute and 30. Well, now I've removed the 15-minute, like I only focus on 30-minute. Keep stop loss below the previous candles. See, a year ago, same thing. Keep stop loss below the previous candles. No questions. No, keep this about that time. Yeah, because I released this PDF to everybody and they started asking me questions. So I released an update, and the update only had these two lines in it. The update had these 2 lines in it. No questions, please. None will be answered. Yes, you are right. This looks like Head and Shoulders. If you were so smart, how come you didn't figure this out? God bless haters gonna hate. Yeah. So I mean, a fake out is basically a Head and Shoulders. You know, like you have something like this. Price breaks down, creates a head, creates a shoulder, and then continues going up. So you can say, okay, yeah, this is an inverted Head and Shoulders, and this is a correct Head and Shoulders. Price breaks up, comes down, retest, goes back down, retest, and then continues moving down. So a bearish fake out is also called the inverted Head and Shoulders, and a bullish fake out is also called the like a normal Head and Shoulders, basically. So this I realized later on, once I started really studying fake outs and how candles are closing back in the range and below the zones. I started to look at this. I'm like, hey, wait a minute. This is what they call a Head and Shoulders. Damn, I figured this out with the candles. All right, what's this example here? Okay. Yeah, see, I've been numbering captions since a year ago. So it just made me better. All right, so number 1, had resistance here when this candle broke up, so this was resistance. Candle broke up. Let me get a color over here. So this was resistance here, candle broke up, came up to this resistance, another resistance reached, and candle reject to go down to retest, right? So this was resistance reached over here. Now this candle refused to close above the breakout point of retest. So see, so this candle had to close bullish at this previous resistance, but close back in the range and will go straight to the bottom. It closed back in the range and this candle came back to the bottom. Now this candle had no wick to the bottom, but we had a complete breakdown, because now when we look at the candles, what happened was that this candle made a low right over here, right? The next candle went bullish, right? But it closed below the support. It still doesn't mean it's a sell. And the candle after that closed bearish. This means now we have confirmations it's a sell, because a resistance has been formed. And what happens? Candle broke down, and the first target is going to be this wick fill right here. It fills the wick, and it continues to break down. And then we have a bullish candle formed, so support formed. And candles go back up to retest the same resistance they broke before. But since this candle closed bullish at the resistance, it doesn't mean that it's a sell, because the candle has closed bullish. We need a bearish candle close. So the next candle closes a doji candle. Still doesn't mean it's a sell, So the next candle closes bullish. This candle closed above the breakout B, so now it should continue up the range, right? So it closes bullish at support. So this means the next candle should continue moving up. So just take a buy and moved up and place a stop below the previous candle, and candle closes bullish. Next candle closes bullish. You trail the stop below the previous candle, and next candle goes up. You trail the stop, and so on and so forth. So it's very important. We have almost 31 people here in this Zoom, but this week, every New York session, out of these 31 people, only 2 people posted charts in the New York channel with, labeled charts. So I don't know what's going on, man. You guys need to start posting charts. So I know, how you guys are analyzing charts, how you guys are marking up charts. Don't be shy, because, if you're shy, you're not going to get nowhere. That's just the cold truth. I'm not being evil or rude or mean, but I'm just saying it. You have to post charts. You post charts, it tells me how well you're doing. And if you post charts, man, your chart can probably help somebody. Maybe someone took the same trade to the opposite side and you took a winning trade. And if they take a look at your chart, they'll be like, oh, yeah, Marjan, she posted a chart. This makes sense now. Or Saren or Ari posted a chart. It makes sense now. Or maybe, Mr. AP or Jose Nunez had a sell and they had a buy and the sell worked out. And they probably look at Jose's chart. They'll be like, oh, yeah, you know what? His chart makes much more sense now. So that's a good learning opportunity, and that's how we grow. So, this was a little rundown on fake outs. I wanted this to be 30-40 minute webinar, but it turned out to be a full hour. So that's okay. So I'm going to open up the floor over here. Let me just do this here. All right. So you guys can basically unmute yourself, and probably ask them questions and whatnot. We can do it for that, for 5-10 minutes. It's okay, if you have no questions, that's perfectly fine. That means I did a good job, but I'm going to place this PDF. Actually, let me see if this is still in the, oh, this is where I control everybody. All right,
that's the floor page.
Yeah. Yeah, that's the gates to hell. Confused trader. All right. Yeah, that's my username on.
I think it is on now. I think I've seen it.
You've seen it?
Yeah, I think so.
Oh yeah, right there. Yeah, how to combat fake outs. Using high time frame confluence to find lower time frame entries. What's this? Oh, what's this PDF here? Oh, okay. Achirapalon. Yeah, this is a good friend of mine. He wrote this PDF. Thank you for bottom of my heart. Yeah, this is a very nice PDF. Really good examples of, how to look for, how to look at higher time frames and then look at the lower time frames. Yeah, it could be a good read.
Yeah, it's pretty interesting. I've looked at that one.
Yeah. Ooh, nice graphics he's used. What else we got here? Oh yeah, how to use take profit without hitting stop loss. This was a very important PDF, or this was actually a troll PDF I wrote. How to use take profit without hitting stop loss, guaranteed method. The most guaranteed method was, there are a few simple steps. I have the top in terms of pips. Yeah, it was just like putting stops at break even. If you put stops at break even, it's never going to hit your stop loss. Basically, that was it. Stops at break even always, because the worst thing is that when you let your profitable trade go in negative, that's the worst thing you can do in trading, man. Trust me. Never do that. Perfect. Seems like there are no more questions, or maybe, guys are going to go over this again. Will the $25,000 account happen today? Yes, today or tomorrow. Today or tomorrow, I'm going to put everyone's name in a little basket, and then we're going to choose a name, and that person is going to get the $25,000 account. But it has a leverage of, I think, 1 to 10 leverage or 1 to 3. So I think on that you can open max 0.25 lot, which is still pretty good risk. It's not 1% risk. What's this? Where can the video be found? Yeah, so this will be recorded and placed in the drive as usual. When you do questions, do you have a view about calling fake outs only really count in 30 minutes or higher?
So yeah, I asked that earlier, man. It was just based on, my fake out, I only class it as a fake out when I'm looking at 30 minutes, if that makes sense, because it tends to happen a lot, because it seems to be a lot more confirmed. But it does happen on 15. But I don't know how you view it. Do you
Yeah, so the 30-minute is going to be much better, right? Because if you look at the 1 hour, and if you look at, so this was the 1 hour candle right over here, right? So sometimes the 30-minute candles, they move fast, and if you're waiting for the 1 hour to close, you miss the move.
Yeah.
Right. So I go down to the 30-minute, because the 30-minute candle confirmations are much, much higher, because the candles are more prone to respect the previous candle highs.
Yeah.
Right. And now if you look at the same thing on the 15-minute, let me just go to the 15-minute here real quick. If you look at the 15-minute, so now you see on the 15-minute, even though this candle broke out, this broke back in, this closed bearish, the next one broke the high of the previous one.
Yeah, that's what, when I'm looking on 15, I used to get caught, when I used to do it a lot, I used to get caught out, trying to get back in, for example. If we say this is broke out to the top and we're going to trade down as a sell,
yeah,
it would catch me out, because I was using 15-minute to say, oh, that's a fake out. But when I started using 30-minute, it kind of eliminated that fact. And it gave me a little bit more confirmation. I managed to get into a trade, which was then, so for example, in this case, a sell back to the bottom of the range, and that worked a lot more. So that's just something I picked up myself. I didn't know if you viewed it similar on, like 30-minute breakout is a little bit more strong.
Yeah. It's the same thing. Like I view the 30-minute just like that. 30-minute is much more strong.
Yeah.
15 minutes too volatile, 1 minute is too late. No, 15-minute is weak confirmations, not volatile. 1 hour is too late, so I go with the 30-minute. But then again, you have to do your own testing. You have to see it happen over and over again yourself. And then you're going to get more confident in taking these trades. Perfect. So the recording is going to be placed in the, drive, just like everything else. So you guys can get the recording from there. I'm actually going to head to the gym here pretty soon.
That's early for the gym, dude.
Oh, yeah.
Hey, Raja.
Hey.
Is it going to be under the webinars or the refreshers folder?
It's going to be under refreshers.
Okay, thank you.
Yes, sir. Mr. Logan officer. Yeah. Never too early for this.
Right now, actually.
Oh, yeah?
Yep.
Nice. All right, guys. Take care. Have a good weekend.
Yeah. Have a good day, bud.
Yeah, you too.